Welcome to tonight's webinar, How to Become a Stock Market Day Trader. I'm Tyler Ballhorn, founder of StockScores.com. I'm also a professional day trader. I've been doing that for 27 years now. Maybe not day trading for 27 years, but trading for that long, and certainly day trading for a long time out of that. This presentation, I'm going to go through the following. I'm going to first describe for you what day trading is. I'm then going to go into the things that you need to learn in order to be able to day trade, whether you want to do it part-time or full-time. There's a number of core areas that you have to master. There are some things that you can bring to the table which will help you succeed. I'll discuss those. We'll talk about the 80-20 rule of trading. And then people are always asking me, what are your trades? What kind of money can you make in trading? And so I'm going to show you what I made on Wednesday. We're going to go through the economics of day trading and give you a sense of sort of what the potential is for those who master the art of day trading. And I'll talk a little bit about how I can help you get there. I've been doing this for a long time. I've been teaching people for 17 years, and I can certainly get you there quicker than I think anyone else can. We have some courses available that can help you learn how to do what I do, whether you want to be a longer-term investor or a short-term day trader. All right, so what is day trading? Essentially, when you enter and exit a position within a trading day, you are day trading. If you hold a position overnight, so if you buy a stock and sell it tomorrow, that is no longer day trading, that is now swing trading. Swing trading is holding from anywhere from 2 days to maybe 2 weeks. Position trading 2 weeks to perhaps a year. And day trading is just 1 day, in and out within the day. What that means is that you are in cash overnight, and that actually lowers some of your risk because you don't have the potential for the market to have a huge sell-off because of something that happened in global markets and you have the whole market crash on the open. We don't have that when we're day trading because we're in and out within the day, and we can manage risk more effectively because of that. As a day trader, what I do is focus on stocks that are moving. Every day, my list of stocks that I am trading is different than the previous day. I don't trade the same stocks day in and day out. I focus in on the stocks that have the best potential, and I have a process to identify those stocks each day. I want to focus on stocks with good liquidity, those that are very actively traded, because it's easy for me to move in and out of them quickly. Now, I am a strategy-based trader. We'll expand on that idea later, but that is something that I strongly recommend anyone who wants to make a career out of trading focus on. Don't focus on trading based on gut feel or casual skill, I suppose. What is important is that you follow a set of rules for when to buy, when to sell, and don't rely on intuition or what you think might happen. Rely on algorithms and statistical approach to the market. That is how the top performing funds in the world today are beating the market. They're not trading on human opinion. They are trading on statistics and algorithms. And that is how I approach the market as well. It's not complicated, far less complicated than people think, but it does take a different way of looking at the market, and I'll talk a little bit about that in this webinar. The alternative to day trading, if you want to be a short-term trader but maybe not so committed to sitting in front of a computer through the day, you can also swing trade. And that's, as I said earlier, holding stock for anywhere from a couple of days to a couple of weeks, using many of the same principles that I discuss in this webinar. So even if you don't want to day trade, even if you want to be a longer-term investor, a lot of the things that I talk about in this webinar are going to be helpful for those styles of trading as well. And how much time you have for the market sort of determines the approach or the style of trading you do. Day trading is more time consuming than swing trading, and swing trading is more time consuming than position trading. The concepts, from my approach anyway, are all the same. And so take all of this as good information, even if you don't want to day trade. So how do I approach the market as a day trader? Well, this is a sample of a day trade that I made on Wednesday. I bought it right there. And the reason I bought it is it fit the rules of one of my algorithmic trading strategies, something I call an intraday pullback play. When I do intraday pullbacks, my first step is to create a list of stocks that I will monitor through the day. I'll show you that process later on in this webinar. And it's really a step-by-step process to build a watch list of 20 to 40 stocks, which I then shortlist down to my favorite, say 8 to 15 stocks. And it is those favorites that I monitor through the day for entry signals using indicators that I have developed. So you can see that there's little marks on these charts. There's pink dots, there's some white dots, there's lines drawn on those charts, on this chart. All of those are based on indicators that I have created for this particular program that I took this image from, something called TradeStation. And I'll expand on that when we get into the tools section. For now, what I want you to sort of get from this is that I bought the stock at $13.72 at about 12:15 Eastern time, and by the end of the day it had hit $15.85. That was at the close there, and that led to what was an 11-to-1 reward for risk ratio. I will explain what reward for risk ratios are and how you calculate them. I'll do that a little bit later. But essentially what this means is that for every $100 risked, you made $1,100. So if you risked $1,000, this had the potential to make you $11,000. So again, we're going to get into that in the economics of trading a little later on. I just wanted to give you a sense of where we're going, because we're going to get into the weeds a little bit, talk a little bit of theory. Maybe it's a bit boring, but it's important to understand so that when I get into, how much money can you make trading and those questions that people always ask me, you'll understand some concepts so that you can understand the answer to that question. All right. So let's say you just say, well, you know what, I'd love to be a trader. It sounds like a good lifestyle. I can work from home. I can travel. I can live anywhere. Certainly in my situation, I've, in the last year and a half, I've lived in Maui. I've lived in Whistler, British Columbia, which is a great ski and mountain bike place. I'm currently in Kelowna, British Columbia, which is a beautiful place to live, wine country of Canada. That's one of the great things about trading is as long as you can plug a computer into the wall and get an internet connection, you can do it anywhere. And it gives you a lot of freedom to travel. But in order to get there, you need to have a few different things. And the first, of course, is knowledge. You need some core skills to be able to trade. There's certainly the basics of the stock market. How do you get an order filled? How do you open a brokerage account? What is a stock? These are basic things that someone who's never traded before doesn't even know how to answer. And so in my books, I start with some of those basics so that you can get up to speed. You then need to have an analytical framework. You need some tools in your toolbox for doing the analysis. And I've essentially got 6 things that I teach people to do their analysis. Support and resistance, optimism and pessimism, price volatility, abnormal activity, and support, resistance, optimism, pessimism, price volatility. That's 6. This is 1, 2, 3, 4, 5, 6. Good thing I can count. All right, so those are the 6 things. If you can understand those 6 things really, really well, you have everything in your analytical toolbox to be able to apply my strategies. Beyond that, you also need to understand risk management. Our number one goal in trading, number one thing, far more than any other goal, is capital preservation. That is my number one goal, limiting risk so you don't go broke. And there's a few things that we do to do that. We size our positions appropriately for the risk of the stock. The method I use, you can essentially make a 50-cent penny stock have the same amount of risk as a $50 blue chip stock. It's all about how much we buy and how we plan to lose if we are wrong. And so that's a big part of what I teach is that risk management component. There's also the money management component. We typically have some limited amount of capital. How are we going to allocate that capital to get the best bang for our dollar? And that is not as complex as you would think. It's about prioritizing based on things like liquidity, price, abnormal activity. Some of the key components of my strategies can allow you to focus in on the stocks that give you the best bang for your buck. Now, is that important when you have $1 million to trade with? Not so much. But when you have $10,000 to trade with, that is far more important. You have to focus in on the stocks that have the best potential to give you a return without using as much money. And so money management is an important concept. I also want to teach people how to develop strategies. I develop strategies. It's my favorite thing to do about trading. I can teach you the core skills to do that. Not everyone wants to develop strategies. I can do the work for you and you can follow my strategies, but I think everyone should at least understand the concepts of strategy development. And then finally, there's the mechanics of trading. How do you use the software that traders use? Things like TradeStation, things like my StockScores website. How do you use some of the indicators that are available? What are the processes to be as efficient as possible? You know, day trading isn't really complex. It's far simpler than I think people think. However, it does require you to be quick, to be efficient, to be focused, to be determined, and the mechanics have a big impact on those things. All right, now the next thing you need are strategies. If you're going to be a strategy trader, you need to have some trading strategies. What is a trading strategy? It's really the rules for when to enter, when to exit the trade, how to size and manage your risk. These rules should be well tested. They should be understood. Even if you don't develop the strategy yourself, you should understand the rules and what they're based in. All of the rules really come from analyzing data, and this is where the power of statistics comes in. If you devise a set of rules to make money in the market based on the last 10 trades that you did, your rules probably won't work in the market. You need to build a data set of at least 1,000 trades to come up with a set of data that can work over a large number of trades. And that is how you can develop a good strategy. So I have spent years, and I can't even imagine how many hours, coming up with the rules for when to enter, when to exit, sizing positions, and managing risk. Those are the things that go into my strategies. Now, when you see my strategies, there's typically, 4 or 5 rules on the buy side and maybe 3 rules on the sell side. I can write all of that on the back of a napkin. But the effort and the work that went into that is considerable. And I enjoy it. Not everybody likes doing it. And so a lot of people would just rather buy my strategies through my courses that I make available. But if you don't want to do that, if you want to develop your own strategies, then there are some things you need to understand about avoiding bias, about data analysis, about statistics, so that you can come up with good, successful trading strategies. Another thing you need are tools. There's thousands and thousands of stocks out there, and if someone puts the right stock in front of me at the right time, I know where the trade is. But because there's so many stocks out there, the challenge is putting the right stocks in front of me at the right time. I use 2 tools to put the right stocks in front of me at the right time. One is StockScores, which is my website, and the other is TradeStation. I'm going to show you StockScores first. If we go into the StockScores website, I've logged in already, and I'm going to click on the Tools menu and go to the Market Scan tool. That brings us to here, and I have a scan in here called Day Trader. So I can just go down the page, select Day Trader. This scan is only available to my active trader students. Today it found for me 15 stocks that meet the criteria of that strategy. Now that is one way to build your watch list. The other way, which is really better, and the reason it's better is because StockScores is not in real time. It's not a huge issue if you take your trades after, say, 10:30 in the morning Eastern time. But if you want to catch trades a little earlier, or if you want to have a more extensive list with more in-depth analysis, then you should be using something like TradeStation. So we'll jump over to that next. This is TradeStation here. It is a software program from the United States. I have nothing to do with it. This is not an endorsement. They don't pay me to say anything. This is just what I use. I've been using it for as long as I can remember. It's a great program because it allows you to write your own indicators. I approach the market with the idea that I need an edge. I need a way to beat all those other people out there who are trading. And one of my edges is that I have developed my own indicators for TradeStation. Now, some of those indicators are also in the StockScores website, but I have a process with this tool to identify opportunities. I typically run a scan. So there's a scanning window right here. I grab all the stocks that are found with that scan, I paste them into another window where I look for the stock to have a certain amount of liquidity. I can sort this by number of trades. I can grab the ones that I'm most interested in, and I can copy those, and I can then paste them into another analytical window that calculates for some of my indicators that I have developed for TradeStation. You'll see here there is something called action candle and action candle bearish. There is something called a pivot trend line, and then there's some more iterations of the action candle indicator. Well, those are indicators that I wrote for TradeStation to help me find the stocks with the best potential. And what I like to do is focus in on those that have action candles. Now, as I do this webinar, the market is closed, so it's not giving me real-time action here, but during the trading day, this is all blinking and changing, and I'm getting values in here that indicate that that particular stock meets the criteria of that indicator that I have developed for TradeStation. Now, when there is a stock that has what I call an action candle, it will put a little pink dot on the chart. So you can see here, there's a pink dot on that particular 13-minute candle, which told me it met the first criteria of my strategy. We're going to talk a little bit more about that later. Just wanted to give you a little sort of idea how I use TradeStation to build my watch list. Now, ultimately, what I am doing is building a watch list. This is my watch list from today. The stocks that were on the buy side, the stocks that were on the short side down at the bottom. And I've got some other indicators calculating in here. You can see, again, these are my own indicators that I use for TradeStation. And it allows me to identify things quickly. You know, the market is a big game. You're competing against people all over the world, many of them very, very smart. And you need to have tools that give you an edge. So I have written my own indicators for TradeStation. Many of these indicators are available to my students so that they can do the same thing that I do with TradeStation. So that's a little quick overview. Obviously, when I teach people how to trade my approach, I go into a lot more detail about how to use that tool. In fact, we have 2 videos that go into that in depth. Now, not everyone wants to have TradeStation. If you are in the US, you can have a brokerage account with TradeStation, and that point, if you trade enough, TradeStation is $0. I am in Canada, and Canadians cannot have a brokerage account with TradeStation, so what we have to do instead is subscribe to it. It costs about $350 Canadian per month to subscribe to it. And that's after I get my students a little discount. So if you're one of my students, I can get you a $100 discount off of that, but it's still $350 a month. Now that is a cost of doing business. You know, if I'm day trading day in and day out, it's an invaluable tool. It's like the cost of a storefront. You know, if you want to open up a store in a mall or something, you have to pay rent, and that's one of your costs. When you are day trading, this is one of your costs. And it's really not a huge cost, but still when you're learning, it could be somewhat prohibitive. And I've got a way to cut this down with another service that we offer called Active Trader Live. I'll talk about that in a minute. But that's kind of your maximum cost for your tool. Some people would rather use a program called TC2000. I think it's a very good program. I've used it before. I quite like it. The problem that I have with it is I can't program the indicators that I have created for TradeStation don't work in TC2000. In fact, they don't work in any other platform. So if you want to use my indicators to trade with, then TC2000 doesn't really work. A lot of my students still do use it. They adapt my processes and my concepts that I use in TradeStation for TC2000. And I would say they can get it to 70 or 80% there. And so it's pretty good. It's not great, but TC2000 is, I think, $100 US a month, something like that. So it's cheaper. And maybe when you're learning, it's a good way to go. I do recommend, however, TradeStation as the best choice, but it has a higher cost. Your broker will have real-time charting programs, and those are important, especially if you want to use Active Trader Live, which is a service that I offer where I give you the signals of when to buy and sell. And if you have Active Trader Live, then you don't need TradeStation, but you should have a real-time charting program. And most brokers offer that to their clients. And if you trade enough per month, you can get that for free. If you don't trade enough, then they're going to charge you some kind of a fee. Usually it's less than $100 a month. Tools for order entry. Well, that real-time charting program is probably also your order entry tool. So When you want to place your orders to buy and sell, you're going to do that through your brokerage trading platform. Some of them are software-based installations on your computer. Others are web-based. And the nice thing about the web-based ones is that you can use them from any computer. You can probably use them from your phone or your iPad. The downside is web-based ones aren't usually as fast. There's a little more delay in getting the order filled. So I prefer the software type platforms, but there is a migration away from those, I guess, because everyone's trying to make the computer sort of irrelevant. They just want to be able to access those platforms from any tool. It's also important to be able to do post-trade analytics. I do that a lot. I mostly use Excel, so I build spreadsheets. I'm going to show you a clipping of one of those in a moment. And those Excel spreadsheets, I track all my data every day. I put in all the trades for the day, whether I took them or whether the ones I missed, but the ones that still met my rules. And I track performance over time so that I can come up with this data set that will help me improve my strategies in the future. That's a very important process. Not all of my students do that. I would say 50% of my students do that. I wish it was 100% because the people that put in that time to do that extra analysis are going to be better traders. But it is time consuming and not everyone has the time. So it is something that I do, and I share my results with my Active Trader Live subscribers. Word is another way to track your performance as a trading journal, to put your comments in on every trade. That's something I recommend. There are other trading journals out there. I haven't used any of them, so I can't give you much feedback on how well they work, but I know that they are out there. Now, finally, one of the tools that I've just developed in the last little while is this Active Trader Live. Active Trader Live is a daily webinar. It starts at the market open, goes until the end of the trading day. And in Active Trader Live, I basically build the watch list for you. And we'll talk about building the watch list again in a moment. So I build the watch list, and then I monitor that watch list using computer algorithms to identify all of the valid trades. And when one of those stocks triggers an entry or an exit signal, you get an alert real-time instantaneously through the webinar that says, the entry rules have been satisfied, the exit rules have been satisfied. The nice thing about Active Trader Live is you don't have to put in the effort to run TradeStation yourself. You don't have to do the work. We basically do it all for you. When I say we, it's basically me and my computers. I've again coded a lot of the rules for my strategies into the computer so that it instantaneously, without human emotion, without human error, implements my trading rules, and it spits out the alerts in real time throughout the trading day. I'll show you how that works in a moment. Another thing you need when you're trading is process. This is actually more important than people think. As I said, trading is very time sensitive, so you have to have a great process to implement the rules of the strategy, a step-by-step plan for implementing the trading strategy. It should be very mechanical. It shouldn't be wishy-washy. It should just be do this, do this, do this. If this happens, then you do this or this. And if that happens, do this or this. It's kind of like a little decision tree. And that's how I develop my strategies, with a very mechanical process for identifying the opportunities that can make me money. It should be efficient. You don't have a lot of time to waste when you're trading. A lot of trading is waiting, but then when the trade comes, you have to act very quickly and very efficiently. And in the first hour of the day, I am very busy building my watch list. That's at a point where I have to be very efficient. Later on in the day, the action is relatively slow, so you have more time to do things. But in that first hour, you have to be very fast. By making your process very mechanical, what you can do is remove emotion. Emotion is the enemy of every trader. We have, when we trade, a big problem called our heart, and sometimes we have our brain getting in the way. How's that for a brain drawing? Okay, you can't think a lot when you're trading, and you can't let your emotions get into trading. You can think a lot when you're developing strategies. That's when is the time to be smart. But when you're in the middle of the trading day, you shouldn't be thinking smart anymore. You should simply be following your rules that have taken you a lot of time to develop. So in the trading day, it's a mechanical, step-by-step, logic-based process. After the market closes, that's when you can do your thinking to develop better rules. So the process that I use is step one. I scan the market for stock scores, action candles, and something called abnormal volume stocks. And I have some tools for TradeStation that allow me to do that. I kind of gave you a little hint of how those work earlier using TradeStation. So that's my first step. I then take that list of stocks, and that's usually 30 to 50 stocks. I then take that list and I assess and score them to prioritize. And so that takes my list from 30 to 50 down to maybe 8 to 15. And this is my priority list. I monitor that list of stocks for entry signals using something called a message candle indicator that I have developed for TradeStation. Now again, I have an automated tool that identifies these. I don't even do the work anymore. I used to. I did it for years. But now I've got the computer doing the work. And that is something that is available to you through my Active Trader Live subscription. Once I'm in a position, I then have to monitor my holdings for exit signals. We use something called reward for risk lines to pick our exits. Typically, we hold stocks until the end of the day, the last 5 minutes or so, but sometimes we get exit signals earlier. And again, this whole process can be automated and done for you through Active Trader Live, which I will show you in a moment. So what do you need to do this? Well, finally, you need capital. How much capital? Well, we're going to talk in a minute about risk reward when we get into the economics of trading. But let's just say that you are risking $50 per trade. That's your risk tolerance. You probably need about $10,000 of capital to be able to trade with a $50 risk tolerance. Okay, whatever the number is, multiply it by 200. Now there's quite a bit of variance in this number. In a market when you have lots of low price stocks moving, this can be closer to 100. In a market where it's more of the large cap, expensive stocks moving, this can be closer to 300. Right now, it's more on the high side. I think the other day I calculated it was about 270 times, but that was because it was a day when we had stocks like Goldman Sachs moving, which are expensive, low volatility stocks. And so it takes more capital to trade them. By the way, if you don't have a lot of money, then when that Goldman Sachs trade comes along at $140 a share, I don't even know what Goldman Sachs trades at these days, you're just going to pass on it because it takes too much capital. You're going to wait for the stocks that are in that $2 to $15 range because you get more bang for your buck out of those type of trades. Lower price stocks just need less capital because they tend to be more volatile. And so, where you might take a $3,000 position in a $3 stock, you could easily take a $15,000 position for the same amount of risk in a $30 stock. And that's just because this one is going to be more volatile on a percentage basis. But let me say it again, our number one goal is capital preservation. And so when you start trading, I want you to start with no risk. Using my simulator, which is free to use at tradescores.com. You can go to www.tradescores.com. That is my simulator. And at TradeScores, you can practice trading without taking any risk. If you don't want to use TradeScores, then you could also use Excel. You can just simply use a piece of paper and write down, I bought BlackBerry today and I paid $8 and I sold it for $9 and I made $1, and track your results that way on paper. That's referred to as paper trading. I think TradeScores is a better way because it's all automated and you can really track it without cheating. And it gives you a good amount of feedback to tell you how you're doing. Now, once you're successful with no money risked, then you can start to trade with a little bit of risk. Start with $50 of risk per trade. Even if you have, $100 million to trade with, it's not enough zeros. I want you to start with $50 worth of risk because when you're learning, you're going to make mistakes like anything else. When you start riding a bike, you fall. When you start trading, you're going to make mistakes. So start with zero. And once you're successful at no risk, pump it up to $50 and then to $100. And then you're successful at $100, pump it up to $200 and then to $300 and so on and so forth. What you're doing is laddering up your risk as you get successful. Why do you do that? Because one of the key things with trading is overcoming your human emotional attachment to money. And by doing it this way, we can slowly desensitize ourselves to risk so that we don't let our emotion play a role in our decision making. And if we start to fail, let's say at $300 worth of risk, we get too caught up in it, we get emotional, well, maybe drop your risk level down to 200 or maybe down to 100. As you have failure, decrease your risk. You don't want to go broke. Our number one goal is capital preservation. And so if you can't make money on paper, you shouldn't be trading with real money. And if you're making mistakes when you've got more risk, then lower your risk until you sleep well at night. Now, those are the things that you need to learn. What are some of the things that I see making people successful? Well, let me first say that trading is simple. It is not easy. So intellectually, it's not very difficult concepts to grab, but it does take hard work to learn. You have to get lots of repetition at doing what I teach you to do. And with repetition, it becomes instinctual so that you don't have to think. You want to start slowly, building up your risk tolerance, walking before you run. Now, what are the things that determine success? Assuming you have good strategy and you have a good methodology, then you need practice. You need to get lots of repetitions at doing the trading processes so that you're good at it. And there's just no replacement for practice. If you want to be a good skater, you got to get on the ice and skate a lot. If you want to be a good mountain biker, you got to get on your bike and mountain bike a lot. If you want to be a good piano player, right, got to play the piano. So it's no different with trading. Got to practice. Trading also requires focus. You have to take those trades when they come along. Like anything, determination is a big determinant of success. Having discipline, you have to follow the rules. These are the things that I can't teach you. I can teach you the importance of them, but you have to put in the effort to practice. You have to have the focus. You have to be determined to succeed. You have to have the discipline to follow the rules. If you are not following a strategy that has a positive expected value, and I'll explain what that means in a moment, you are a gambler. And I don't want you to be a gambler. I want you to be a trader, and that requires following the rules of a proven strategy. Final thing I want to say in this section, I guess, is that market conditions vary, and trading does not deliver the same results day by day. One day can be a great trading day, the next day can be a slow day. And then 2 days later, it can be a great day again. You don't know what kind of a day it's going to be, and you have to realize that trading is streaky. It's not like a job where you go there every day and you get paid the same amount every day that you're at work. In trading, you can sit on your hands all day and make nothing, or you can have a day that is just so easy and the money just flows because it's a hot trading day. 80% of your profits will come 20% of the time. And you have to take that mindset into trading so that you don't expect that you're going to make $500 a day. You might average $500 a day, but you might have a day where you lose $200, and then a day when you make $1,000, and then a day when you lose $100, and then a day when you make $300. That's how trading is. It's kind of like this, but what you want is, although it may bounce around a lot, you want something that generally goes up from left to right. If you were to plot your profitability on a graph, that's what will happen. And this is something called an equity curve, which I'm going to show you in a moment. All right, let's talk a little bit now about the economics of day trading. First concept I want to teach you is reward for risk. All right, reward for risk. You buy a stock at $10 and you plan to lose if it falls to $9. This is your stop loss point, and this is your buy point. The risk is the difference. $1 a share is your risk amount. All right. Now let's say that stock goes up for a while and you end up selling it at $13. The difference between your buy point and your sell point, which in this case is $3, is your reward. Okay, so you made $3 of reward for $1 of risk, and this is therefore called the reward for risk ratio. Okay, now this is an important concept to understand because it's how we measure our success in the market. If you risk $100 and you make $500, you have made a reward for risk of 5 RR. All right? Pretty simple concept. Important, very important. I use it all the time. Next concept I want to talk about is probability. Let's say you enter a trade. What is the potential that you are going to be right? The only way you know that is by testing your rules over a large data set. So if you have developed a set of rules based on 5,000 trades from the past, whether you did those trades or whether they're back tested, something you've done in a computer model. So you've tested 5,000 trades, and from those 5,000 trades, you know that 62% of the time you make a profit and 38% of the time you have a loss. Those are your probabilities. Now, what is the average reward for risk when you make a profit? And what is the average loss when you lose? Well, if this is, say, a 2 RR on average, and this is a -1 RR on average, then you can calculate expected value. If you have a 62% chance of making $2 and a 38% chance of losing $1, and I know I don't need to put brackets in there for all of you that know math, I'm just trying to highlight the different points in this, then you can calculate the expected value. This is 124 minus 38. What's that? 86. So that strategy has a value, an expected value that is positive of 86. I think I did that right. Just doing this in my head quickly. So anytime you have an expected value that is positive, then you have a strategy that's worth trading. As long as it is positive enough to outweigh commissions and slippage, which is the difference between what you want to buy it for and what you actually pay. If you can have those things in alignment and you have a positive expected value, then you can make money. And from that, from your testing, you can develop something called an equity curve. I'm going to show you that in just a second. First, I want to show you one of these spreadsheets that I built to track performance. Now, these are actual trades that I've identified in the last week using my rules. And so this were the stocks that were on the watch list that particular day. There's a bunch of statistics here that I track. Drawdown, max gain, gap test, that's something that you probably don't understand. Volume test, very important. Price test. All of these things make sense once you've taken my active trader course. But what's important over here is this column which says EOD. That stands for end of day profitability, and that's quoted in RR terms. Okay. So for example, this trade right here, which was on UNP, earned a 6.05 RR at the end of the day. The one above it, TripAdvisor, earned a 5.35 RR by the end of the day. That's based on the entry signals that are identified by my computer. All right, so that means that this winner paid for a few losers because it had a very strong RR. And I can calculate what the accumulated RR is over time and plot that in an equity curve. So this is an equity curve for all of the trades that my system identified between May 1st and May 17th. I'm using different filters in that spreadsheet. I'm only looking at my 2 rated stocks. Every day I rate stocks. In my watch list, I rate them a 0, 1, or a 2. 2s are kind of my preferred list. Those are the ones that I tend to trade. 20,000 trades a day, that means that they're very liquid. And I'm using a $1,000 risk tolerance. So what does this equity curve mean? Well, this was the start of the month, May 1st over here, okay? I didn't put the dates on here, but that was May 1st. And this is May 17th. All right, whoops. So for the first few, I don't know if it's a few days or first few trades anyway, the strategy actually lost some money. Okay, it went down below 0 here. And then it worked pretty well for a couple days. And then it kind of went sideways for probably about a week. We had a little downturn, a little up, a little down. That's pretty normal. And then we had a little surge upside, and then we had a real strong day or two. Then we had some profit taking, and then we had another real strong surge. So you can see, remember I was talking about how trading is streaky? Well, that's what I mean, is that it doesn't go up from left to right like that. I wish it did, but it doesn't. So instead, it kind of bounces along, but there is a general upward trend in this equity curve, right? And you have some deviation around the curve, but it's more or less trending up from left to right. Now what this shows is that from May 1st to 17th, this strategy earned about $62,000, which is 62 times risk. Remember I said the risk tolerance here is $1,000. If your risk was $100, which means you don't use as much capital, then this one earns $6,200, okay? So the risk tolerance times the risk reward ratio gives you your total profitability. So if you were using a $200 risk tolerance and we're at 62 times risk, then that makes you 12,400. That's before slippage and commission. But that shouldn't be a huge factor. All right, so that's how an equity curve works. And anytime I develop a strategy, I'm always looking to get an equity curve that's going up from left to right. What you don't want is an equity curve that bounces all over the place. Even though it might be higher over here than it was over here, with all this deviation, it probably isn't going to be a moneymaker, and it'll probably drive you crazy. So you want something that generally goes up from left to right. And you can see that this one does. This is an equity curve for my intraday pullback strategy. Now, all of the picks made to develop this equity curve were all stated publicly in my Active Trader Live service. I'm in a webinar every day. I'm not calling, the computer is identifying the trades in real time. So this isn't woulda, coulda, shoulda back-tested stuff. This is real alerts that came during the trading days that people were able to follow in my room. People always say to me, how much money can you make trading? Show me some actual results, blah, blah, blah. So here's the results from Wednesday. On Wednesday, I had 36 stocks in my Active Live watch list. So that's the Active Live service. I'm going to show you how that works in just a moment. And so it was 36 stocks, but only 8 of those were on my preferred list. So my preferred list is what I tend to trade myself. They're what I figure are the best of the best. Out of those 8 stocks, there was a trade in all of them. So there was 8 trades for the day. 7 trades were profitable. 1 was a loser. And using a $275 risk tolerance, the profit at the end of the day was $5,777. This is after commissions and after slippage. So it's not hypothetical profit. This is what I actually made. And this is my little screen capture from my brokerage account, which shows, number one, it shows the stocks I traded. It shows the profit on each trade. This is in US dollars. Whoops. This is in US dollars. This total here is in Canadian dollars. It's kind of confusing how the broker does that, but that's what that is. So Canadian dollars, I made 5,777, but on the individual trades, I made 1,170 US dollars on Walgreen Boots. I was short of that stock. $640 short on Goldman Sachs, long on UVXY, $1,174. So you get a sense of the stocks that I traded on Wednesday and the profitability per trade. So there you have it, actual trade results, kind of sort of putting the process together into one screen. Now, what is StockScore's Active Live? This is something I developed. It's actually been something I've offered for a couple of years, but I've taken a great leap forward, I guess, in now it is completely automated and computer driven. So my algorithms do most of the work. I still create and monitor, or I still create the watch list every day. The computer monitors it. So for the first hour, which is 6:30 till 7:30 Pacific, 9:30 till 10:30, maybe 11 o'clock, I am building the watch list. Okay, that's my first job, and that's busy. That's you have to be very efficient, very mechanical, and I build the watch list. So that's my 30 to 50 stocks. And then I rate those stocks as either 0, 1, or 2, and the 2s, there's maybe 8 to 15 of those. The 1s, there's probably 30 to 40. There's not too many zeros. We usually drop the zeros off because they're not worth watching. Okay, all of this is done in real time in a live webinar, just like you might be watching this webinar. I'm doing these things live during the trading day. You log in once you've bought a subscription for the month. You log in, watch me trade throughout the day. You watch me build the watch list. I have a little commentary. I don't talk as much as I used to, but I'm trying to sort of explain what I do a little bit. And then we let the computer identify the trade signals. When a trade signal comes, it will ring a bell first. And then if it actually executes where it's a valid trade, you'll hear the word strategy alert from the little computer voice. And we identify that that is a trade. And then they're tracked in real time with profitability as well. So I do all the work. The computer helps me a lot, obviously. Now, this service is only available to my StockScore's Active Trader members. I don't want to have hundreds of people using this service because the more people use it, the less valuable it is. There's sort of a limit to how many people can use it without it taking away the opportunity. Now, because I focus on very liquid stocks, we can have quite a few people using it. But as I said, it's not something I really want a lot of people using because my first priority is to make money trading. But this is a service I offer for my students. And so if you've taken the Active Trader course, you are eligible to subscribe to this service. It is $195 a month. That's Canadian dollars. But again, you have to have taken the Active Trader course first. So I'm going to show you a little video of that service actually running. So I just did a screen capture the other day just to explain how this works. So this was like a recording about what's happening during the day. You can see here there's little indicators, IPB long. That means that stock at that moment. And then you can see down here we're getting little alerts as well. So what that indicates is that BlackBerry
strategy alert.
I don't know if you just heard that, but the voice just said strategy alert, and we just saw CCL draw there. We have it down here in the corner as well, flashing an alert. So that's how you know that there is a buy or short sell signal on that particular stock. And so you really just have to listen for bells. So there's one now on Valero right there. And if we go look at Valero, oh, it might be, yeah, I think it's probably down the page here. You don't see it because it's off the page. But that was a short sell signal. Now these are the early signals. When you see a value in this column, it's just kind of a pre-signal. It's a way to just quickly check it to see if it's valid or not and get ready to take the trade. But until you get the voice saying strategy alert, it's not a valid trade. Okay, so this is the watch list here. Obviously these are charts just so I can show things. Here's another one, Momo, and there you can see Momo showing IPB long there. This is the current trades that are open. Obviously green are profitable, red are losers. And this number down here is how much all of these collectively are up or down for $100 of risk. So what this means is that if it's up $1,698 or $1,700 right now, divide that by 100 and that's how you get the risk reward. So this currently has a total profit out of all of these of 17 RR, and it's changing tick by tick as the market moves, and hopefully you can see that fine print. I know it's a little small, but that's what's going on there, is it's actually tracking the performance of all of the picks through the trading day. Now this was as of about 12:30 Eastern time, so kind of the middle of the day. In the middle of the day, the trades were up 17 RR. By the end of the day, I think they were a little higher. Okay, so that's a little video of how that works. I'll kill that now and move on to the next slide. So how do you become a day trader? The way I did it is I developed and tested my own strategies. It took me 8 years before I was successful. I learned a lot of expensive lessons. I spent hundreds, if not thousands of hours teaching myself. I started trading 27 years ago, and there was no books, there was no courses, there was no online course, there was no online really. The internet was kind of new. You had websites, but you certainly didn't have online video like we have today. So I had to do it the hard way. I actually started out charting stocks by writing down the prices out of newspapers. I had a year's worth of financial newspapers, and I would track the prices on graph paper of all the stocks that I followed using pencil and a ruler. Nowadays, of course, all kinds of websites give you charts, and it's easy to look up charts, but that's where I started from. So I've been around this about as long as you could be, and I had to teach myself how to do this. Nowadays, people like me will teach you their approach. I've been teaching for 17 years. Well, actually probably longer, but I've had courses available for 17 years. And I only teach twice a year. It's not my primary occupation, but it is something that I do a couple of times a year. I typically do a course in November, a course in the spring. We have one coming up, which is why I'm doing this webinar now. I teach less and less. Next year I may only teach once. It's a lot of time, obviously, so I'm less inclined to do it from what I used to, but this year we have one coming up in June. I'll talk about that in a moment. So you can either do it yourself, teach yourself, great, that's what I did, or if you want to save yourself time and brain damage, you can purchase my educational courses, and I'll teach you what I've learned from my 27 years of experience. Now, all of the education is online. I used to have books. I used to teach in university classrooms. I don't do that anymore. I now made it all online. Technology allows us to do that sort of thing now. And it's all hosted in something called the Stock Scores Education Center. So if I jump back to Stock Scores and go to Education, what you'll see on this page are 4 areas. The Getting Started area, which is free. There's some little videos in there on some of the basics of how to use the StockScores website. All free. You can go look at that after this webinar. Foundation. These are the core skills. Remember I talked about the analytical framework to be able to apply strategies? Well, here it is. If you want to learn predictive chart patterns, click on that little link there, and there will come an article that explains support, resistance. Remember those 6 things that I talked about? You want to watch a video on the 6 elements of chart patterns, you just click on this, hit play, and the video will play. You can watch those videos on a computer, on an iPad, on a phone, as long as you have a smartphone. It's pretty flexible nowadays to be able to do that. We also have, in the foundation area, assignments, which is a little, not a test, but an assignment for you to make sure you understand and learn something from what you've learned in that module. And then we have a test. And so there's a multiple choice test where you can test your understanding of the material. All right, so that's the foundation area, and that's the analytical base. It doesn't teach you any of my rules, but it teaches you the analytical methodology so that you can apply my rules. That's the foundation. Once you're done that, then you're ready to start learning the rules for my strategies, and we have 2 sections. We have investor strategies, which is for the person that maybe doesn't want to spend that much time doing the work. I've got a webinar coming up next week that will talk about my approach to investing. We'll talk about these things then. And then for the day and swing trader, we have the active trader section where you have videos on how to use TradeStation, my strategies. Here's a swings trading strategy, a day trading strategy, day trading, when to know how to exit those trades. There's videos, written lessons, and videos for all of those modules as well. So that's all in the StockScores Education Center. Now, what do you learn in the investor course? Let's differentiate between the investor and the active trader. Investor starts with a foundation, so you get access to that. And then you have access to my investor strategies. You have access to the StockScores Market Scan tool, which I showed you that earlier. And you get access to the investor market scans. You get email support from me, only me. I don't have a bunch of staff answering questions from my students. I do that myself. And with the investor course, you get 6 months access to my tools on StockScores, which can then be renewed at $300 a year. I say Canadian because I know we have a lot of international people watching nowadays, so I just want to differentiate that. Canadian dollars are relatively weak compared to the US dollar, so it's a little cheaper for people in US dollars. The Active Trader course gives everything in the investor course. You get the foundation, yes. You get the investor stuff, yes. But you also get the Active Trader strategies, access to the Active Trader market scans, still get email support from me, still get access to our tools, and you also get my real-time indicators for TradeStation. So these are for TradeStation. I have spent thousands of dollars and countless hours creating these indicators. These are included only for my students, and they're very important. It's those little pink dots, the white dots, the different indicators that I showed you when we were looking at TradeStation. Those are things that I have programmed. They don't come with TradeStation. You have to get them from me. The only way to get them from me is to do the Active Trader course. I don't sell those indicators. I don't let anyone else have them. I don't want a lot of people doing this. So I teach a small number of people every year. I don't do this every weekend like some education companies do. That's not my primary thing. I do it a couple times a year because I enjoy it. But you're not going to see me doing this next weekend again. Live training. So as I said, a couple times a year, I teach personally. So in addition to all that stuff that's online, I do some live training via webinar in real time that will sort of bring you up to date on the latest and greatest things that I'm doing and focus you in a little bit. I call it, anti-procrastination method, so that you have to learn it. So for 3 hours on Saturday, June 3rd, from 9 till 12 Pacific time, I'm going to do the foundation review. So in 3 hours, I can teach you all of the concepts for analysis. You can do all that on your own. This, as I said, is anti-procrastination. So I'm going to walk you through it, kind of piece it all together. People always find that they learn it a little better when they have me take them through that 3-hour lesson on a Saturday morning. So we're going to do that Saturday, June 3rd. The following week for the investor students, and I guess the active trader can join in on this as well, but each evening at 6 o'clock Pacific time, we are going to scan the market together. We're going to do it Monday, Wednesday, Thursday, and then the following Monday. The reason I have to be somewhere on a Tuesday, and Fridays are slow, so I don't like to do Fridays, okay? So Monday, Wednesday, Thursday, Monday, 4 hours of instruction, 4 one-hour sessions. We are going to scan the market together. We're going to evaluate charts together so that you can practice the things that you learned on Saturday. For the Active Trader students, this is Active Live. So you get a free month of Active Live with the course, and you are going to see the real-time trade signals. You're going to see me explain them a little bit. The first week especially, we're going to do a little bit of step-by-step how to build the watch list so that you can do it on your own if you want. That way you don't have to subscribe to Active Live. You could subscribe to TradeStation instead. So for the first week, we're going to do more education. And then after that, we're just going to trade. You're going to watch me make the trade calls. The computer does a lot of it. You're going to watch me build the watch list. The computer monitors the list for those trades, and you get those real-time alerts. We're going to do that for the whole month, Monday to Friday. I don't think there's any holidays in June, so it should be the whole month. And most of the work is done in the first hour, and then after that, maybe 90 minutes. After that, we pretty much just monitor the watch list at about 8 o'clock Pacific time. So if you're in the East Coast, that's 11 o'clock Eastern time. I review the trades of the previous day. So I build a spreadsheet every day. I put all of the trades from the previous day into that spreadsheet, and then we review them together. We look at, what you should have made if you followed the rules perfectly. And we just try to learn something from that and do some analysis. So you get all of this coming up in June if you purchase the Investor or Active Trader course before May 30th. Now, investors don't get the Active Trader Live. They get the Foundation Live, and they get the Investor Market Scanning. The Active Trader people get the Foundation class, they get the Investor Sessions, and they get Active Trader Live for the month. That has a $495 value. If you purchase before Tuesday, May 30th, that is free. What is the cost to purchase the course? Investor, $2,495 Canadian, quite a bit cheaper in US dollars. Active Trader course, $34.95 Canadian. Some people say, well, what if I do the Investor now? I want to upgrade 6 months from now to the Active Trader. You pay the difference plus $250. So to upgrade from Investor to Active Trader is $1,250 because there's a $1,000 price difference plus the $250 fee for upgrading. All right, let's do a little bit of stock analysis, or not stock analysis. Let's take a poll. If you have an interest in receiving an email from me after the fact with some details about the upcoming course and some links to register, then just say yes to the poll. I'm going to put that poll up. If you're watching this as a video, I will edit that out. It's kind of boring. And okay, so we're good. Moving along, how to register for the course. You can go to www.stockscores.com/learn. There's a couple of videos on there that give you more information on the two courses. There's a big breakdown of what's in the courses as well. You can buy them right there. And if you buy it before May 30th, you're signed up before then you're going to get all of this live training for free. After May 30th, it is $495. By the way, it's 11 p.m. Pacific time that I use as my cutoff point. We're going to start our education on June 3rd. So the sooner you purchase the course, the more time you're going to have to study and get ready for the class on June 3rd. So a lot of people always wait till the last minute and sign up on May 30th, but I really recommend you do it sooner than later because I want you to go through a lot of that material in the Education Center. I'd like you to watch at least the first half of these videos because those are kind of the basic ones, and read the lessons. That's going to take you a couple hours, so give yourself some time to get up to speed before our June 3rd class. You're just going to get that much more out of it. And again, if you are watching this as a video and you didn't get a chance to answer yes or no to the poll, but you do want an email from me with some of those details, just email me. Here's my contact information, tylerb@stockscores.com. Send me an email. And if you're watching this, let's say you're watching this in July or something, and this June course is already passed, but you have an interest in maybe doing the next one, email me and I'll let you know when the next one is coming up and give you some guidance on that. So there's my email address. I'll leave that up there for a moment. I hope you will follow me on Twitter. My Twitter handle is @StockScores. I post comments fairly regularly on some of my trades and that sort of thing, comments about the market. So one of those free things that you can get a little bit of insight into how I trade the market. So follow me on Twitter. Also subscribe to my YouTube channel. I have all kinds of free videos on YouTube that gives you a little more insight into my approach. There's the YouTube channel. Go to stockscores.com. You have to spell out .com. And you can subscribe to my YouTube channel. Each week I upload a video with analysis of the market and a little trading tip, trade of the day, or trade of the week actually. So those are all things that you can get for free. I want to thank you all for joining me for the webinar. I appreciate it. If you have any questions about the upcoming classes or any of the training that I do, please email me. That's my personal email address. I welcome any emails you have. And as I always like to say, trade well.